Hi, hello everyone. Let's start discussion on very important topic, which is end-to-end credit proposal workflow. Or the answer in interviewer might ask you, explain the credit life cycle, how it's work, and what are the process or what are the step include in the credit life cycle. So in this slide or in this video, I'm going to explain you entire credit life cycle step by step and the process by process how it will work and how the financial analyst or the credit analysts will do at each stage to analyze the proposals of the credit proposals. So let's start discussion on the first slide, guys, the comprehensive credit proposal process. Before we are going to move to the details on the topic, I would like to request you, if you are interested into the domain of credit risks, market risks, or the operation risks, or the liquidity management, or the quant analysis, or the business analyst role, so please do like and subscribe my video or my channel. So I'm continuously creating videos on these topics, so that will definitely give you the industry level or the ongoing knowledge that required in the top organization or the big four firm or the top consulting firm. So that will definitely help you to get job in this industry. So let's start discussion on the a very important topic, which is a credit proposal workflow overview. So where we are going to discuss on the deal organization and document collection, where we are going to discuss on the financial and risk analysis, proposal structure and approval, documentation, disbursement and monitoring the credit. Okay, how the borrower will utilize your credit. So the end-to-end credit proposal workflow represent a structure and multi-layer process designed to evaluate borrower credit worthiness. It ensure the regulatory and internal policy compliance and arrive the informed lending decisions. This workflow typically begin with deal origination, where the relationship manager identify the client need and conduct the preliminary discussion to understand the borrowing requirement. During these stage, the RM relationship manager gather the initial insights into the borrower business model, financial health, or the proposal credit facility, ensuring align with the institution credit appetite. Okay, the following these document collection become the critical step involving acquisition of KYC document, audited financial statement, GST return, bank statement, or the industry specific record that collectively enable the structure financial assess. These financial analysis stage include the ratio evaluation, profitability, leverage, liquidity, along with cash flow statement, trend analysis across the multiple year. Stress testing will also done in this phase. So in a stress testing is applied to determine the resilience under the adverse leverage, and subsequent risk assessment focus on business risks, management risks, industry exposure, regulatory environment, and the behavioral scoring on model bureau data. So internal rating model generate a borrower risk grade that help align a credit team with institutional risk framework, and propose the structure is them undertaken to determine the appropriate credit facility tenure, repricing and replacement schedule, repayment schedule, and collaborate requirement. These also include the defining covenant. So that condition replace a security structure while ensuring legal and evaluation checks, confirm the collateral advocacy and enforceability. Once the approval is completed and detailed credit note is prepared, obtaining strength risk mitigation facility structure and compliance with the policy norms. This proposal then move complete and detailed credit note is prepared to the committee, where the query may be addressed before the sanction. Once the sanction, the document process involve issuance of sanction letter, execution of letter agreement, and complete the condition process. Finally, the disbursement occur full by post-sanction monitoring, which include the periodic financial review, covenant tracking, account behavior monitoring, and renewal risk assessment and ongoing cash in. So that's we do in the credit proposal workflow. So let's discuss this thing in detail for the upcoming slides. So in the next slide, we are going to discuss on the role and responsibilities contextualization. So where we are going to discuss on the context and the role overview. So here we are going to let's understand that the collaboration, credit evaluation, financial risk analysis, proposal structuring and documentation, and post approval monitoring. In a previous role supporting end-to-end credit proposal process responsibilities typically encompasses direct collaboration with relationship manager, credit analyst, risk team, and the operation unit to ensure the comprehensive evaluation and seamless workflow execution. The role often require the engagement at multiple stages, starting with understanding borrower requirement, analyzing historical performance, trend, and evaluating the nature and advocacy of submitted document. Responsibility also context conduct in deep financial analysis, identifying risks and validating compliance with institutional framework and preparing initial appraisal summaries. Interaction with internal stakeholder were essential, particularly when validating finance policy interpretation, gathering clarification, and review the risk position through discussion with credit and the risk team. The role also involves supporting process structuring by examining borrower need against the acceptable credit parameter, recommending suitable facility structure teams such term loan, working capital limit, and non-fund based facilities to ensure the alignment with product program. A significant part of role involves interacting with legal, technical, and the valuation partner to ensure the collateral enforceability, security advocacy, and draft credit note and supporting document addressing the review query and refinancing proposal detail were key recurring tasks during the committee proposal. The roles sometimes include the preparing the detailed deck or providing analytics support after the approval. The loan support operation team is reviewing the documentation package, fulfilling the conduct the precedent and obtain the legal clearance and ensuring the policy compliance before the disbursement. Subsequent responsibility will happen, and then they will focus on the early warning signal and initial renewal or the enforcement evaluation. These functions ensure that the credit's exposure remain aligned with the institutional risks and tolerance regulatory standard sites. So let's move on the next slide, which is the workflow stages ongoing to document collection. So what are the documents or what the analyst will do while collecting the document? So in a financial analysis stage, the representative, the quantitative core of the credit proposal workflow, it involves a deep dive into the borrower historical financial performance, begin with analysis and audited financial statement to recover the profit loss account, balance sheet and cash flow statement, ratio analysis, formal credit component, including the examining of liquidity ratios such as the current ratio or the quick ratio, leverage the ratios like debt equity, interest rate coverage, and profitability ratios such as the margin, ROC, EBITDA margin. Trend analysis across the multiple year helps the align with the performance and consistency pattern or irregularity requiring further security cash flow analysis and evaluating operational sustainability, workflow, capital efficiency, and debt servicing capacity through measuring the DSCR trace testing, assessing the borrower resilience under the adverse condition, including the revenue decline, cost escalation, delay, receivable financial projections, submitting the borrower, are evaluating resilience and alignment the performance of the borrower. So these output of financial analysis is a detailed picture of borrower financial health, strength, and vulnerability for forming the basis of risk assessment and the facility structure. So these are the financial analysis while the analyst will do while the doing the risk the credit appraisal assessment. So let's move on the next slide, which is the most important slide, guys, where we are going to discuss on the structuring, approval, and the closing. So in the structuring, approval, and the closing, we are discuss on the structuring the proposal, credit committee approval, sanction, documentation, and the disbursement, how that will happen. So where once the proposal is approved, the sanction stage begin with the issuance of formal sanction letter detailing approval limit, pricing, covenants, and security repayment term and the condition precedent. The borrower acknowledge the acceptance this term before the document proceed legal documentation. Typically include the loan agreement, security documents such as mortgage, land, or hypothecation agreement, and restriction of charge with relevant authority. Collaboration with legal term ensure the enforceability of document and compliance with regulatory uh, guidance. Collateral valuation report, insurance certificate, and due diligence confirmation and review and ensure the advocacy of security. Once all conditions precedent and fulfill, the case move to disbursement of operation team verify the documentation and completeness and internal compliance before the resulting fund post disbursement monitoring begin. Immediate and include the periodic review of financial statement tracking, covenant compliance monitoring, account conduct, and validating the operational performance. Early warning indicators such as the return check, decline sale, deteriorating margin, delay in financial submission triggered deeper analysis or the correction action, ongoing monitoring ensure the continuous health and reduce the default risk. So let's move on the next slide where the post-sanction monitoring. While once the loan is the disbursed, then the lender will need to monitor that loan status or the performance of the borrower or their the credit risk assessment. Lender will do check the probability of default, loss given default, or the exposure of default, and accordingly the interest rate will apply. So financial statement monitoring, COVID compliance evaluation, account behavior monitoring, and renewal assessment adjustment. Post sanction monitoring is crucial to ensure that borrower perform remain aligned with the initial expectation that the emerging risks is identified early. Monitoring activity include the regular review of financial statement to track the revenue pattern, profit margin, and working capital efficiency. Borrower may be required to submit the quarterly and annual statement as a part of covenant application. Analysis evaluate the compliance with covenant and such as minimum DSCR, debt service coverage ratio, maximum leverage, and the restriction on adding the borrowing account behavior monitoring through bank statement review and the internal system alert and tracking over the positions. Visit the borrower premises may be conduct to verify the business operation, inventory level, and capacity utilization. External data source such as credit bureau update the industry report and market intelligence helps identifying the borrower risk trend and renewal assessment offers initially for the working capital facilitation and involve the comprehensive revaluation and financial operation condition enhancement and modify the facility maybe request the growth and credit evaluation needs so that effectively monitoring ensure the timely corrective measure and restructuring and collaboration intensive support to needed the safeguard the financial amount. So these are the detailed overview of the end-to-end credit proposal workflow. If you are interested in this, the credit risks or the market risks or the risk management, so please do like and subscribe my channel. I am continuously creating videos on this topic. Once again, thank you so much, guys, for attending this interesting seminar. Thanks.